I think that's a very good point, very good point. And the question that you have raised is, as per section 247, all the valuations are to be done by a registered valuer, and registered valuer for the purpose of section 247 would mean a valuation professional registered with IBBI. Now, what you say is absolutely correct. As per the valuation rules, any valuation that has to be done under the provisions of Companies Act, that valuation has to be done by a registered valuer only and by nobody else. Now, when you talk about SEBI, unfortunately or incidentally, SEBI has its own regulations for the purpose of pricing and for the purpose of valuations under different situations. But at the same time, SEBI's regulations cannot be in contradiction with the provisions of the Companies Act, and therefore SEBI has, as I understand, SEBI has slowly started allowing even the registered valuers also to do the valuations under different regulations of SEBI. There is no blanket permit as such for the valuations to be done by the valuation professional. Actually, it's a very relevant point that you have raised, and why it's a very relevant point, and that is because many of the fiascos that we have experienced in the recent past or in the distant past in the capital market is as a result of the current methodology followed by the companies which come out with the IPO. And the classic example, as all of you are aware, is that of Paytm. There are many companies. Paytm, of course, is one of them because that's a very prominent example. Now, this company came out with the IPO at a issue price of 2,150 a year back, and now I understand they're coming out with a buyback at the price of 600 rupees. Now, tell me what can be more farcical than this? A company which is coming out with the valuation issue price of 6,150 1 year back, and this company now itself is, the company's share has got so much of beating on the stock market that this company is now offering to buy back these shares at 600 rupees. Now, what is the sanctity of the valuation of Paytm when it came out with IPO? Now, in my view, there are 2-3 reasons behind it. The reason number one is the valuation or the pricing which is done by of IPO by these companies which are coming to IPO is as per regulation 6 sub regulation 2 of the ICDR, SEBI's issue of capital and disclosure regulations. Now that regulation in my view is completely defective. And why that regulation is completely defective? Because it allows the companies to do the valuation of the IPOs following the book building process. Now, there is nothing wrong in book building process. What is wrong is that these companies together with the merchant bankers also give a price band. Now that price band, who decides it? Now that price band, because I was trying to do some research and I couldn't get any idea as to who decides that price band. It is just given in the red herring press prospectus, but I will understand that this is the management of the company and the merchant bankers and the advisors of the company, they would decide the price band. Now, there has to be some sanctity in deciding that price band, and if that job is done by a valuation professional, a member of IBBI, I'm sure there would be a definite sanctity in that price band being decided, and thereafter fiascos like Paytm or many other companies will not happen. So this is one matter which I would urge all the RVOs in India. They must take it up because there is a definite deficiency, and I will be very happy to be corrected by anyone. There is a definite deficiency in the regulation, ICDR regulation 6 sub regulation 2, and the deficiency is who decides that price range. And remember, all said and done, even if it is an IPO and the valuation is being done as per the SEBI regulations, that IPO is in accordance with the provisions of the Companies Act. And if it is in accordance with the provisions of the Companies Act, then the valuation, somewhere the valuation has to be done by the registered valuer only. And this is definitely a deficiency. I will urge all the RVOs in this country to please take it up. This will not only help the valuation profession, it will also help the retail investors who get so badly hit because of the wrongly priced IPOs. And what to talk about Paytm? Look at the example of LIC also. Now, what is the methodology followed by the LIC for the purpose of IPO valuation? Same thing, book building process. And then in that book building process, somebody decides the price band. Who decides that price band is not known? What is the basis for deciding that pricing band? Price band is not known. And then even a company like LIC also, the share in retail investors got very badly hit. So you have raised a very good point, very valid point, and I completely agree with you. And I think it's time that all the RVOs and everybody should take it up with the Ministry of Corporate Affairs as well as with the IBBI, that this deficiency has to be removed. If the valuation rules say that the valuation has to be done by a registered valuer, then in case of IPOs also it has to be done by a registered valuer only. And the price band which is given in the red herring prospectus, that also has to be done by us following a systematic method as per the Index 113 and level 3 input, and that is discounted cash flow. If it is done, I am sure it would help everyone.